It's time to do 55 minutes of business, and the platform is Business Incorporated on Channels Television. Here's what we have prepared for you today. In Zimbabwe, there's a boost coming to the railway project because the public sector is partnering the private sector. With the new price of petrol in Nigeria, what's happening to subsidy? Is it there or not? The EU and other partners are providing 36.9 million euros for Namibia's energy transition. Good afternoon. Welcome to the program. I'm Ini John Mekwa. We'll start from the global space. As usual, oil prices, we see, is attempting to hold its on early trade on Thursday after an overnight sell-off as players grapple with weak demand alongside a possible delay to more supply entering the market next month. We look at the number, we see right there, it's green. That's about 0.9 cents for Brent, and that's about 1.12%, 0.12%, at $72.79 a barrel. That's for Brent, which Nigeria deals in. For WTI of the United States, that's up even more, 0.17%, $69.32 a barrel is what I've seen. And this is after both benchmarks lost about $1 at the close of Wednesday street. OPEC Plus is also a factor now. They're discussing how to delay output increase scheduled to start in October after oil prices tanked to a 9-month low on September 3. Four sources and other market traders have confirmed that this conversation is going on. Do remember that last week, the Organization of Petroleum Exporting Countries and their allies, led by Russia, were set to proceed with 180,000 barrels per day output hike. It's supposed to start next month, October, and it's part of the plan to gradually unwind its most recent cuts of 2.2 million barrels per day. Still in the global space, gold was a little changed on Thursday as investors kept to the sidelines ahead of U.S. payroll data that could provide more clues on the size of an expected rate cut this month. We look at the numbers and we see that spot gold remains unchanged. A lot of uncertainty there. That uncertainty is what we signal. $2,494.73 per ounce. We have this number this time yesterday. So very unusual to see unchanged number in the price of gold. US gold is however down 0.1%, $2,524.90. That's almost unchanged, because we had about this also at this time yesterday. Now, non-yielding bullion trend tends to perform well when interest rates are low, and that's what we're expecting to happen as the Fed sits this month. Also, data overnight shows that US job openings dropped to a 3.5-year low in July, suggesting that the labor market was losing steam, but reduction on it is probably not enough to warrant that. So we look at other metals. Spot silver, we see ease 0.2% to $28.21 per ounce. Platinum is on the flip side, 0.9% in the green, went up to $910.50. Palladium is on the other side now, 0.3%, $930.76 per ounce. Now we come to Nigeria. A good thing that the Central Bank of Nigeria has started, and this is the second one they're releasing the PMI, that's the Purchasing Managers Index, and this is for the month of August. Now let's look at the numbers. It shows there's been an increase now for the 13th consecutive months, and it's August Purchasing Manager released by the Central Bank. The key highlight shows that the composite PMI for the month was at 50. Any number above 50 shows growth. And so that's where we start calculating from. So 50.2 index point, that's what we see for the composite PMI. It was 49.7 in July. So there's been an increase right there. At least we're on a growth trajectory and hope that's sustained. Services sector we see has also increased compared to July. 50.3 is what it was in July, but 50.7 now in August. Industry is not yet on a growth trajectory because it was 48.3 in July, but now 49. So there's an improvement, but it's not yet on 50. Agric is on 50 now, shows that perhaps we are starting to experience growth. Output is a little bit up, 50.3 in July and 50.8 in August. And new orders also went up significantly up there from 48.8 to 50.5. Employment also, but just slightly up there from 48.8, or slightly down, beg your pardon, 48.8 to 48.7, while deliveries, just right there. It was a drop compared to what we had in July. July was 50.8, but August went to 50.1. That's delivery time. So I guess services and customer services and delivery is another factor that needs to be considered, in this, according to the PMI released by the Central Bank of Nigeria. Talking about agriculture now, the 2024 Lagos Chamber of Commerce and Industry Agric Symposium was a platform to explore the potentials of achieving a well-developed agriculture sector. Attendees there agree that the challenges facing players in the value chain in Nigeria are enormous and would require the cooperation of everyone. The 2024 Lagos Chamber of Commerce and Industry Agric Symposium and Fair, with the theme Nigeria Food Production in Global Space, Leveraging Competitive Advantage, has stakeholders from both the public and private sectors x-raying the realities.
I don't know, where are we?
Some realities shared explains why Nigeria still has the threat of not just food insecurity, but underdeveloped value chain in agriculture.
If I already spend all the money that I should be using to run a business, trying to chase a minister, trying to get power cut, trying to get approval, before I now start running the business, and then somebody is sitting here and is borrowing me money at 4.8% a month, and they say they are doing me a favor, the business is already dead on arrival. And I'm competing in the same market with a country where the government gives them money at 3% per annum, 1.5% per annum. Then we as a country take our sovereign guarantee and go and borrow that money at 1 to 2% per annum and come and unlend. MPR now has gone up to what? 20-something percent. 27%. How much are the banks going to unlend to us? So that's why we cannot be competitive. To cultivate
technology offers the needed solution, but is yet to be optimally explored.
Today, we have problems, as in serious problems, that can be solved with technology by young minds within the cultural ecosystem, from production down to marketing, down to distribution, down to processing, to funding. If only we could have an aggregation of brilliant agricultural minds that would sit, develop solutions to help solve problems within the agricultural sector.
For Lagos State government, intentionality and accountability in the agriculture value chain will drive solutions faster.
But the onus lies on us now to also follow that investment to market, meaning when we make support available, we should also trail, the outcome from farmers, and not just trail outcome in terms of yields and quantities, but to also know which destination markets those items are going to, what the cost of production is at the point of origin, and what the landed cost would be in whatever destination markets there are. We should also start tracing the different distributors and dealers, that are taking those products, and how much it is being sold to the average market woman and man.
Actions, after all shared, is what the organizers hope for.
So one of our key expectations is that the government will see what the private sector is doing to advance food production. Some of the exhibitions here are very, very innovative solutions to our problems and challenges and opportunities in agriculture.
Nigeria's agriculture sector holds the potential to supply not just food, but also raw materials for industrialization. By implication, growth in the sector means growth for the real sector. So that's it. Agriculture and food security, very related to energy. I know the latest one now is the petrol price hike in the country, and how we're going to handle it. But let's first understand. We have seen a statement from Dangote Refinery. We were told that the circulation of Dangote Petrol will begin today, 48 hours after the production began. but they had hinged it on the activities or the lifting by NNPCL. So we're waiting for NNPCL now for the lifting of Dangote Petrol. Meanwhile, we have seen the adjustment on pump prices for petrol, and we want to try to understand if this has anything, if there's a subsidy in there, or can we expect that subsidy will be introduced later and prices will taper. So since I'm not an expert in that area, I have someone who is an expert right here. Dr. Wisdom Ena is an oil and gas expert, joins us in the studio. Dr. Ena, good afternoon. So we're trying to understand, we know that the president had said subsidy is gone, but subsequently we had directly or indirectly that subsidy is back. Now, petrol prices have been, it's no longer a rumor, it's reality. We have it at petrol station, NNPC, and of course, once NNPC increases its price, others will certainly follow suit. I hear some people are paying as much as 1,200 now in places like Port Harcourt in Rivers State. So we're just curious, do we still have subsidy from your calculation?
Thank you very much, Ini. I think what we need to know and start from is what is the landing cost and what are the nuances that has fed into some of the pricing that we've seen in recent times. The landing cost, when we take into consideration the cost of the refined product itself, and we also take into consideration the shipping cost as well as the insurance cost, it's about 1,203 naira at the moment.
Sorry, that would be for what? The landing cost?
Yeah, for the PMS.
Okay, will be about 1,300?
1,203 naira.
Okay.
Yeah. And then when you look at that, this is at the moment in September. When you look at such a landing cost, we already know that one way or the other, subsidy was being applied at 617. We do know that, which is what was the guide price at the retail pumps. Now, the big question was, how were we absorbing this, right? So it now looking in retrospect, it almost seems like the federal government, by saying subsidy was out, meant they were not going to make subsidy payments to other entities that were involved in importation business, which was, of course, one of the biggest challenge because of the, fake subsidy claims that were coming in. However, it still means that we were actually paying the NNPC subsidy of some sort, money towards applying subsidy, right? And that's what we realized. At first, it was called a price cap, but now we're realizing that it was actually subsidy. But I think the biggest regret is that subsidy was out as a much better Naira rate, and now it's in at a worse Naira rate, so it's much bigger. Right?
I wonder if it was ever out, though.
No,
yeah, because let's look at those details that make up the price of petrol, a liter of petrol. So we have the landing cost, which you say is about 1,203.
Yeah.
Let's have a rough idea of, we have the Port Authority charges.
Correct.
I know it varies. Do you have an idea? Because I know it varies depending on contracts.
Correct.
Yeah. But do you have an idea, an average of the port's charges?
No, not the exact charges, but I do know that if we take all the charges into account, plus the cost of internal distribution, we should be selling at 1.3. That's what I know. But
are you talking of when you add all of this landing costs, Nigerian
plus
ports,
some of the marginal
vessel
profits,
charges,
correct.
Nigerian Maritime Administration,
correct.
Insurance.
Correct.
So we should be looking at about 1,300.
As a guide price, yes. That's what we should be looking at.
All right.
Yeah. Well, for me, when I look at the pricing that has been reviewed upwards, I'm asking myself a number of questions. And the first question I'm asking myself is that going to be now the new price? And it's quite interesting that it's coming just before we begin to talk about the launch of the Dangote refinery.
I think we got the change the same day, of the production.
Yeah, but I got the message
because you're in the industry.
Yeah, before I even got the Dangote news that he has officially produced. So my question now is, right, is that hinged on the new price based on Dangote selling? Because again, it would make some sense. And I say that when you look at if we're internally buying crude in Naira, we're skipping all the logistics and insurance costs, we should technically, and we can have a large scale of production, economic scale of production, because the Dangote is coming in at 25 million per day. to start with, liters per day, we can technically expect ourselves to be below the price of importing, and that should be the gain. But with the current pricing, we're not sure if that is what has been applied. We're not even sure if we're still going to be paying subsidy at that particular point in time. We're not sure the agreement. I mean, it's very interesting to state that when you look at the agreement that says the NNPC will be the sole buyer at the moment, it's a very good, I like to say, a clever way of trading off between monopoly and a liberalized economy. Because the monopoly is basically one seller selling to the rest of the public. Liberalized is where we have demand and supply playing a role. But of course, in a liberalized system, if you do not have adequate supply to hedge the demand, you then will not have a good equilibrium price. And of course, you'll be having a seller's market. But then the government has come up with monopoly, which is typically one buyer rather, buying all of those products and then controlling the price. So it's interesting to say, are we controlling the price on the context that there's still subsidy? Are we controlling the price, with the monopoly situation? Is that a fair price to say, putting all these considerations, the Naira, the crude of sale in Naira, a large scale of production, and also factoring every other thing that they support, that the regulators will give out to the Dangote refinery, that we can now bring in products and sell it at about $8.55 guide price, and that would be below the importation cost. I think if that is true, then that would be great. But if we're still applying subsidy, then that would be sad, because we need to know the devil in the details, and that is, what is the actual price unsubsidized for our local production from the various production refineries, or for example, the Dangote refinery. Interestingly is, again, what happens if the Dangote refinery, for example, one particular month has to get a lot of feedstock from abroad, and then we cannot give him feedstock? What happens to the pricing? And then, of course, at the $8.55 guide price, what happens when other refineries come on stream, or the existing refineries? Can they still sell at that price and make profits? Because of course, you look at the economies of scale, you find out that the Dangote is quite big and can play around with economies of scale. So how will the other refineries cope with all of this?
Yeah, so many questions, and it boils down to what a lot of analysts have said, which is, can the government be open and transparent with the people? If NNPCL is going to be the sole buyer from Dangote, which is risky, as you have said, because, I mean, are we talking of a monopoly market, which we have been preaching against and all of that, then how much is it coming at? Because then we should have at least a reduction in the price of vessel charges, insurance, since it's within the country. And if the government is actually implementing the crude for Naira, then we should also see that reflect. And perhaps that could help the president's pronouncement implementing the issue of no more subsidy. But I mean, we need to know the numbers. And as you said, the devil is in the details. But I mean, it seems we don't have communication.
It's very difficult because, I mean, if I just line up the narrative from the NNPC side, I get very worried. Within the last 4 weeks, we've heard we're not able to discharge because of thunder. Because of the weather, of course, it's cited thunder as an example. We've also heard that it's not uncommon to owe in this business, but at the same time,
but at first there was a denial of the debts.
Yeah, but I'm coming to that. It's not uncommon to owe in the business, but we do owe, and that we're keeping up with our obligations. Now we've also heard that we are financially constrained. What is narrative? I think it is important for people to know exactly where we are tilting, and if we, you see, this is really important because the NNPC's activity affects the funds that we run in this, sovereignty called Nigeria. And if we don't have clarity, then we have decisions being made without us knowing what options were on the table for the choice to be selected, and then that affects our well-being as a country. So I think you're right. The need for the government to come up more clearly, more transparently is very important. And it's also important for us to have a real clear sync between the government policies, the NNPC, who are also at the front end of these, the NMDPRA, and of course the refineries that are the local refineries. I think it is important for us to put all of this in context and put out the right narrative to the Nigerian people and the international investors who are also watching.
I would also like to bring in the perspective of the modular refineries, because Dangote is not the only domestic refiner in the country. We have the modular refiners who've been there, but I guess because of their size, their voices have not really been heard. I wonder where they come into all of this in this scenario.
I think, I keep saying the modular refineries are going to help us to sort of address some of those regional markets, right, where there are positions. Because I wouldn't say the numbers. If you think about what the NMDPR told us in October 2023, which was the last data I could find, that our daily consumption is about 44.3 million capacity, but that has probably come down. And of course, it's quite cyclic depending on the weather and other things. And if we have, for example, steady electricity or not. But the truth of the matter is Dangote is coming at 25. So who's going to fill the void that is going to ensue? Are we going to import, or are we going to get the modular refineries that are to optimize, the ones that are existing, to optimize their production for at least this regional market? What is the technique? And this is where it comes in. So we need to understand that, the Dangote refinery can play a central role, but we still need the people at the wings to be able to feed the people that are desiring fuel and energy across the various regions. And that's where they play the role. And so we must carry them along. And even when we're looking at pricing, I'm interested to know if the federal government had put into consideration the pricing that would help those guys to be able to grow, or are we still having subsidy? And if we're having subsidy, what's the kind of conversations that are going towards addressing that? Because look at it, a few days ago, we heard that one of the Nigerian planes were kind of seized because of a debt or an agreement, really, between one of the subnationals and an international. So we need to understand that whatever we do, whether we do it at the federal level or we do it within one of our entities in the country, it affects the entire picture. So I think that clarity needs to come out, and we need to start working out a path of recovery. How do we pay off this debt, and how do we get into a position where it is sustainable? Sustainable practice is really important. And then, of course, there's this other issue where we're talking about let's increase prices to a point where we don't have cross-border smuggling. How do we handle that? Because we cannot also be increasing prices arbitrarily and punishing people for not doing the right thing or protecting our borders.
I think this is for another day, because there's still the issue of the supply of crude. Whether it's for Dangote or for the modular refineries,
Correct.
They need crude.
Absolutely.
And that is being used to pay off debts. And that's it.
Absolutely.
But we'll leave that for another day. Thank you so much, Dr.
Thank you.
Wisdom Enang,
Deeply appreciate
oil and gas experts, for your time.
Thank you. Deeply appreciate it.
Let's take a break now. When we come back, we'll head to the market. Stay with us. It's Business Incorporated and Channels Television. Welcome back to Watching Business Incorporated on Channels Television. We head to the markets now with Anete Edit. Anete, you're coming with another red market, day two.
Day two. Intraday, yes. This
Is it
was
because
how
your
we
tie
saw.
is red?
I think I like my red tie, but I don't like. Some people may like this because it's an opportunity to come into the market. Because of course the reds, sometimes it may be not to an advantage to people who are in the market, but an advantage for those who would want to take advantage of the lower price of stocks. Exactly. Okay. So it's one side for one investor, another side for another investor. But let's talk more about the intraday market numbers. 0.22% for Nigerian stock market, 96,000. Of course, we were talking about, we were very optimistic that the market index, the benchmark index of the listed equities, more than 160 listed equities on the Nigerian Stock Exchange. But that number, it failed to live up to that expectation or what we were expecting it to climb into the 97,000 points. So 96,326.53, that was the last track for the all-share index of the Nigerian stock market. And of course, we see yesterday, we saw, first of all, we're talking about Owando making the markets to be in the green at the close of Tuesday's trading session. But for midweek, the same Owando was one of the main factors, as well as 32 other stocks, which countered the gains, which was recorded from 21 equities, while 62 were unchanged for Wednesday. But at the moment, we still see profit taking across the 5 key counters of the market. That's talking about Nigeria's all-share index. Now, for the Johannesburg Stock Exchange, the GSE ASI down 0.15% at intraday, and of course, it has also receded below from 83 to 82, and now almost just it's still supporting itself at 81,788.94. And for the other sides of the African stock markets, EGX30 were in the green, so there's more of a mixed picture for the market numbers on the African continent. For the EGX30, that's where you see the 31,037.28. And for the Nairobi Stock Exchange, it has managed to also climb into a higher territory, 105.20 points at intraday, 0.10%, which is for the close of midweek trading session as at yesterday. So that's it for the African market that we're looking at intraday. And now let's talk more about. First, we had that the milestone domestic dollar bond, which is about $500 million bond, which is was announced on August the 19th by the finance minister, where Nigeria was targeting idle funds in domiciliary accounts of Nigerian savings abroad, as well as Nigeria diaspora and qualified institutional investors. That bond was priced at about $10,000 to enable those with that amount to come into the market and also take advantage of the government's investment strategy, which is aimed at stabilizing the exchange rate and enhancing forex currency reserves, as well as also to manage inflation and reduce interest rates. So now that dollar bond will be the announcement of the results is expected to be announced very soon, and then we'll also take a look at yesterday's Treasury bills auction carried out by the central bank. So now, to give us more details about that, let's bring in Senator Audu, fixed income and forex market analyst, trader to be precise, with Access Bank. Thank you for joining us, Senator.
Thanks for having me, Anete.
Okay, Senator. So I would like you to give me more details because we do not have an official statement from the government, but when are we expecting to have this announcement of the results of the $500 million domestic dollar bond, which was it closed just sometime last week on Friday?
Yes. So for the early feelers we are getting is that it was a very successful outing for the federal government. We hear that the offer was oversubscribed. The offer at that auction was about $500 million. We hear that the subscription was much more than that. As to the exact size, the settlement for that auction is tomorrow, so we should have some clarity on that when that official statement is made. The program size, the total size that the federal government have put out was $2 billion. This first series was for $500 million. So following the results and the settlement that we expect tomorrow, we will now get more clarity on the direction on the balance.
Okay, so from the domestic dollar bond, let's talk about the first NTB auction carried out yesterday at the close of trading yesterday. We saw that the central bank had offered about $233.31 billion, but it was absolutely oversubscribed at about 1.07 trillion naira, which was received across the three tenors of the bills. So now, what does this tell us about this first Treasury bills auction by the central bank for this month?
Yes, so the first auction, the first NTB auction for the month was held yesterday. As you explained, the subscription was significant at over 1 trillion. The offer at that auction was just 233 billion. So it did show that the DMO still has a lot of interested subscribers in its securities. So at that auction, the DMO stuck to his guns. The amount sold was exactly what was on offer, 233 billion. As a result of that increased or that very high subscription, we saw stock rates across all three treasury bills drop. To give you an insight into what happened, the 364-day bill, the 1-year bill, declined from about 20.9% that we had seen at the preceding auction to 18.94% yesterday. Immediately following the auction, we started seeing offers on that 1-year bill at sub 18% levels. However, we did see a moderation toward the end of yesterday and early today to the low 18% levels. On the bond side, the same story still prevalent. So at that window or at that market, we've seen the 2033s trade at very low rates to at as low as 19.7%. This bond had closed at the auction at about 21.5%. So the bullish sentiment is strong in the fixed income market.
Okay, finally, just 20 seconds, Senator. What is the intraday market movement across both the fixed income market as well as the money market and the currencies markets right now?
So as a result of the series of auctions we've seen, particularly on the treasury bill side, we saw an OMO auction on Monday and an NTB auction yesterday. We've seen a significant decline in liquidity. Liquidity figures opened the week north of about 600 billion. As at today, we've seen the liquidity numbers print at a repo that's a negative figure of under 300 billion, about 220 billion today.
Okay, Senator, I think we'll leave it there, of course. And of course, continue to keep our expectations out for that domestic dollar bond result, which we should expect it to come out by tomorrow. So thank you so much for your analysis on the show.
Thank you, Anity.
Okay, so from Senator, we move to Middle East. Well, let's just talk a little bit about the Middle East before we wrap it up. Dubai, as well as the Abu Dhabi, both of them in the green for the intraday market number, 0.03% for Dubai and 0.22% for the Abu Dhabi. And for the Tadawul and the Qatari Stock Exchange, both ended not ended at intraday. Both are in the red, 0.28% for the Tadawul, that's Saudi Arabia, and the Qatari Stock Exchange, 0.12% intraday at 10,308.31. So I don't know your take. It looks like the bears have it in some parts of the market.
Yeah, well, I guess that's just the way it is. When there are gains, investors will have to take the gains, and then we'll see a red market. But thank you so much, Anita, for that. And moving on the program now, let's go to Berlin, where the workers at car giant Volkswagen have expressed their outrage at the decision to roll back job guarantees in Germany. More details now from Berlin with Chiponda Chimbelu. Hi, Chip. Good afternoon.
Thanks for having me. Well, Ini, Volkswagen workers protested at the company headquarters where VW was holding its general meeting on Wednesday. It is, of course, not just the job guarantees that Volkswagen is planning to end for its workers in Germany, but also the fact that the company is considering factory closures here in Germany. And that, of course, would be a historic move in its 87-year history. VW Group CEO Oliver Blume says the company needs to cut costs due to the highly challenging situation in the auto industry. But that is not something that VW workers agree with. The head of the company's Works Council, Daniela Cavallo, blames VW's woes on the executive board, who she says have not done their job. As the biggest car maker in Germany and Europe, VW is a major employer. Thousands of jobs may now be on the line, and not just at the company, but also its suppliers. And that could mean that entire communities could be affected by Volkswagen's cost-cutting measures.
Yeah, that's not something to look forward to. But how did it get this bad?
One of the major reasons is that the company has not recovered to pre-pandemic levels of production, and VW says that fewer sales in Europe have left it with overcapacity in Germany, with too many factories here. Volkswagen's chief financial officer Arno Antlitz says the market isn't there anymore, so the auto giant needs to increase productivity and reduce costs. And it may have 1 or maybe even 2 years left to turn things around, according to the finance chief. Now, last year, VW announced plans for a 10 billion euro saving program, and it said it would be cutting its workforce over the coming years to improve profitability. Now, the company says more measures are needed after recent results. The news is alarming here in Germany. The auto sector is going through its own challenges as it pivots from making combustion engine vehicles to electric vehicles. So it's not just the Works Council at Volkswagen that will be watching the company's moves very closely. Politicians will also be keeping their eyes on the auto giant, as will its shareholders.
All right, but let's turn our eyes to the markets now. What are investor sentiment?
Well, any European markets are expected to be little changed, and they may be taking cues from Wall Street, where U.S. markets struggle to find direction on Wednesday. Investors are currently focusing on the state of the global economy. And today, there is, though, some positive news here in Germany with economic data. Factory orders rose unexpectedly for the second month in July. We'll also be, of course, getting a better sense of where Europe's largest economy is headed later. Economic think tank IFO Institute is set to release its autumn forecast for Germany, which struggled in the first 2 quarters of the year. But markets may still remain in a wait-and-see mode. The latest U.S. labor data is due tomorrow, and that will, of course, probably shed more light on whether the U.S. Fed will be cutting interest rates by 0.25% or 0.5% later this month.
Yeah, we're all counting down to that interest rate cut. Chib, thank you so much. Let's come back to our continent here, Africa. We're discussing sugar. Well, globally, EIU has said that the price of sugar is going to drop about 15.6% in 2024. However, when we look back home, our domestic front, we see that the price of sugar has actually increased so far in 2024 by 6.4%. It's gone from about 78,000 to 83 naira, 78,000 naira to 83,000 naira, in the midst of supposed to be a decline. Well, let's see what's driving this and other issues with Tomiwa Ajewole. Tomiwa is an analyst with Financial Derivatives Company. Hi, Tomiwa. Good afternoon. So why do we have price on the opposite side in Nigeria compared to expectations in the global space?
Yeah, good afternoon, Ini. Thank you for having me. When it comes to domestic price of sugar, we have to actually take it into account what is happening in the global sugar market space. And that's because Nigeria imports about 96% of our raw sugar before we then refine it into granulated sugar. And when you look at what's happening in the global market, global sugar market, we see that prices in the last month has increased about 8%. And that's mirroring what we've seen in Nigeria in the last 2 months, which has with domestic prices rising about 6%. So we're seeing this correlation, and it's because Brazil, which is one of the top producers of sugar, just recently they've had harsh weather and drought, which has led to fire outbreak in their sugar crop yield. And the reason why there was forecast of a 15% decline in 2024 was because we're expecting increased harvest from Brazil, but unfortunately due to weather conditions, not only in Brazil, also Thailand and other top producing sugar countries, we've seen droughts causing weather-related that is affecting supply. So that has led to an increase in the price, and that's what's happening. But when it comes to the outlook for price, so far we're seeing a correlation between oil prices and sugar prices, and that's because sugar now is being used for ethanol production, especially in India, another top sugar producing country. So when oil prices are high, sugar mills are incentivized to use their sugar cane for ethanol production rather than sugar. So that reduces the supply of sugar. So now that oil prices are, coming down, sugar prices are expected to, come down in the near term.
All right. Looking at Nigeria, where is our sugar tax? And I know it's at 10%, and some people are calling for it to be 20%. Is it making any impact to demand at this time?
Yeah, so what's going to determine if it makes an impact is the elasticity demand of sugar, and sugar is actually quite an elastic product for when it comes to the price sensitivity. So ideally, the higher the price, the lower the demand. So when it's taxed, we see an increase in price, and we expect demand to come down. So the 10% actually. The impact is quite minimal. There were some questions to raise it to 20%. If that had been done, we would have seen a fall in the demand for sugar, especially given the current cost of living crisis and how the prices of everything is going up. So ideally, the reason for this sugar tax and the reason why health specialists are asking for the increase is because excessive intake of sugar increases the chance of having diabetes, and Nigeria actually has, in Africa, has the highest number of diabetic cases. About 11.8 million people are living with diabetes in Nigeria. So, that is why there's a call for action to increase tax on sugar so as to curb the demand and consumption of sugar and just improve the health benefit of the country generally.
Yeah, well, unfortunate numbers right there. Now, there's the backward integration program that's supposed to help reduce that 96% import of sugar. Is that in motion now?
Yes. The backward integration program was actually established in 2013, and it's part of the sugar master plan of the country to improve our self-sufficiency. And they've been for about 10 years now. They've made some progress. Part of the goals at the beginning was to have about 250,000 hectares of land just for sugar cultivation. And according to reports, they say they have about 200,000 which they have acquired, which are ready for sugar cultivation. But Nigeria's agricultural sector is dealing with a lot of challenges, insecurity, increasing cost of inputs, and low mechanization and all of that. So that is still impacting the production. And the cost of doing business in Nigeria is currently high. Some of them they still rather import rather than invest in producing locally because of just the high cost of producing in Nigeria. So those are the challenges that they are facing. But ideally, there needs to be more priority given to that section, because that is one initiative that can boost employment in the country. And also, by the time we reduce our import dependency, that's going to reduce the demand for forex, and that's going to be favorable for the naira, which would also ease inflation in the country. So that's an initiative that requires prioritization if we are going to move the country forward.
All right, Tomiwa Jewale, thank you so much for that analysis with Financial Derivatives Company.
Thank you for having me.
And let's go to other countries on the continent. The European Union and other partners on the continent have pledged 36.9 million euros, that's about $40.9 million, in funding for Namibia's transition to cleaner fuels, including green hydrogen projects, according to the African nation that plans to develop that. Now, the 25 million euros commitment by the EU to support Namibia's green industrialization leads initiative that's designed to help leverage public-private sector investment, estimated to reach about 1 billion euros across the hydrogen value chain, from production to transportation and storage. And funding Namibia's green hydrogen project is one of the focus or a challenge for the nation that plans to become a hub of the developing technology. They include $10 billion hyphen projects in which Germany's Entertrag has invested in. Campaign Maritime intends to raise $3.5 billion to build an ammonia plant that would connect new storage and export facility planned by the port of Antwerp Bruges. In Zimbabwe now, the state-owned railway operator has opened up its network to private players, including a unit of South Africa's Green Rod, as it seeks to boost freight volumes that had collapsed after decades of underinvestment. National Railways of Zimbabwe hauled 12 million tons of cargo annually at its 1990s peak, but now manages less than 3 million tons, owing to a lack of locomotives and poor maintenance of its rail infrastructure. The collapse also followed a sharp decline in agricultural mineral output, triggered by violent seizure of white-owned farms championed by Zimbabwe's former leader, Robert Mugabe, in year 2000. However, mineral output is on the rebound, mainly driven by chrome and lithium demand from China. Chinese companies such as Xinjiang Holdings, Sinosteel and Sinomine, and others established iron ore and chrome lithium operations. They have established chrome and lithium operations in Zimbabwe. And in Ghana, bilateral trade volumes between Ghana and Switzerland shot up from $1.5 billion in 2019 to over $3 billion in 2023. This is according to the Minister for Roads and Highways, Mr. Francis Asenyo-Bakwe. He said economic cooperation between Ghana and Switzerland also witnessed a gradual yet significant increase over the past decades, adding that Switzerland is one of the few countries with a trade balance in favor of Ghana. Mr. Asenyo-Bakwe said that Ghana greatly valued the economic relations with Switzerland, pointing out that due to peaceful political climate and security, democratic credentials and favorable investment conditions, there were over 55 Swiss investments in the country. He said this include Nestle Ghana, Accra Brewery, as well as Pioneer Aluminium Factory. Let's go to the crypto space now and see what's happening to the prices. I would say green for Bitcoin, but I tell you, a closer look at the number, I don't think it's something to really rejoice over, but I guess we'll have to work with this at this time. Bitcoin is at $56,894. 27 cents. That's up 0.3%. Not so different from what we had yesterday, just minimal movements, right? Ethereum is still in the red, 0.08% down. This afternoon, BNB Ton has recovered. Interesting. Yeah, a lot of things going on in that blockchain. Solana in the green, Cardano. So much better than yesterday, but it's still a red market. Now, we have a lot of stories going on as headlines there in that space. So Binance is set to launch a DOGS USD perpetual contract with up to 20 times leverage, and this contract 20 times leverage is set to be launched September 10. This was made by Binance, Binance official website. We'll find out what that would mean to you. We also have that Bitcoin network surpassed 50 million minted runes. That for Bitcoin network. There are a lot of activity going on there. They shared this indicating that total number of minted runes on the Bitcoin network has surpassed 50 million. This significant milestone shows the initial hype surrounding runes, a unique digital asset protocol on the Bitcoin network. Now, there's also another interesting one. Former Chief Executive Officer of MT Gox is to launch a new exchange. So what happened to the former one? Will people trust him enough to go in there? And then also you have Ripple CEO Brad announces that Ripple's USD pegged stable coin will launch in weeks and not months. A lot of things counting down in weeks. Hamster is also counting down to September 26th. A whole lot happened. But let's speak to Gilbert Jokwata now to help us understand some of these stories. Hi, Gilbert. Good afternoon.
Yeah, greetings, Ms. Ini. Great to be here.
Great to have you here. So tell us about this launch. I mean, the ecosystem is so busy now, launching, set to launch, introducing, and to introduce. Now it's a launching of DOGS USD. What does this mean, actually? What are people looking forward to in this?
Look for the DOGS USD pair?
Yes.
Okay, interesting enough, the DOGS USDT pair is already trading on the perpetual contract. It actually went live, that was Sunday, 1st of September. It's already trading with up to 20x leverage. I think this is great for investors who are seeking more exposure into the market. And there's also a trading competition as well going on to encourage more traders to take advantage of the perpetual contract, which is taking place. And then beyond this, the whole of Europe, if you look at the European exchanges, they are all ready to take advantage of the liquidity which it is providing at the moment, because a lot of crypto exchanges understand that the millions of users on the Telegram ecosystem, it's presently looking for where to trade their exchanges. So Binance making the perpetual contract available for the public who are willing to be more exposed to the market, I think is great for the ecosystem.
Then the former chief executive officer of the bankrupt crypto exchange, MT Gox, is now going to launch a new exchange. And I'm wondering, will people take the risk of, following him there again?
The thing is, it's typical to see some crypto comebacks from some OG. So the former CEO of Mud Ghost, the thing now is the former exchange, which is Mud Ghost, was operating then as the largest crypto exchange. It was as big as maybe Binance, now, before they had that security breach. So the thing is, some persons are actually happy because it's been over 10 years, of course, and everyone, wasn't happy actually, with the hack that took place. But then he actually has a plan that, okay, he has seen that there are some transparency issue and no major competition between Binance and then Coinbase. And then he's like, okay, I think I'm going to create more like the New York Stock Exchange market, but this time around for cryptocurrency. And he is willing to work with regulators. The thing then is, I think that he has a right to self-determination. But the thing at the end of the day, even if you would have put this robust ecosystem, with the right regulatory framework and maybe compliance, and user-friendly like he plans it to be, but the questions still remain. As much as I know he has, the right to self-will or self-determination, is how much trust does he think that the market is going to have for a business that he's about operating again? I think that he has lost confidence of the market and trust of the market. But yes, if he is able to put this robust ecosystem and with the right marketing, he may be able to have some share of the market, but I don't think he will be able to compete with big players like Binance or Coinbase.
Yeah, and I guess at the end of the day, it's now up to investors to do their research, their background checks before you go for any investment at the end of the day.
Yeah, and community is everything in the cryptocurrency space, where our investing approach is community-based investing, our trading approach is community-based trading. Likewise, when you look at entrepreneurs, what they are building is for a community. So the community already have conversation, So most persons are in the blacklist, even though he does not really have that straight up blacklist, after this over a decade of working with, the institutions and creditors to pay back. And then this year he began paying. But then we are looking at an industry that is community based. The thing will be like, is this a joke? Are you serious? Yeah, he has set this robust ecosystem, but are we going to trust him? And I think the persons that may really dive in may be persons who are relatively new to the industry, and they're like, okay, there's this new exchange, this is what they are offering, but persons who have been available and they know the hurt that comes with the hack that took place in his former exchange, I think he's going to have a hard time really penetrating the market like he would like to.
All right, well, wish him the best, but of course, caution is the name of the game for investors, as you said, especially those new investors on the scene. But thank you so much, Gilbert Jokpata, for your time.
Yeah, thanks for having me.
All right, so that's it on the program. Thank you so much for being a part of Business Incorporated. We have a final one tomorrow. Fridays, it's just you and I from 10 a.m. to about this time. So let's do that tomorrow. But I'll see you tonight, as I hope there's a bit of recovery at the NGX. To be good to have a green market. I'm John McQuarrie. Enjoy the rest of your day.